Remember, what lies behind us and before us are tiny matters compared to what lies within us. Hello, welcome. This is Huskins, your Forex mentor. Welcome to the daily review of May 1st and a preview of May 2nd, your daily dose of events that shape the Forex market. Today, I'd just call it a lackluster day. It was May 1st, was a holiday, and we had two kind of break-even trades. We had one 5 pip winner and we had one 5 pip loser. I'm going to be accounting them as break-even. It's just, it did not go anywhere. Uh, I should have, or next time when half of the world is on holiday, perhaps I'm going to make sure that I'm going to call that out and cautiously not trade out there. So that's about it. And I want to share with you. It happens to be the 100th birthday of the Federal Reserve. In 1913, the US took a very big step away from gold when it authorized the Federal Reserve to issue paper notes that were only about 40% backed by gold while claiming that they were fully convertible. Now, this thing fell apart when people tried to exchange their paper money for gold. In 1933, that's after the Great Depression of 1929. So in 1933, instead of admitting that the central bank was bankrupt, the government confiscated everyone's gold. They made it illegal for them to hold gold and devalued the paper to $35 per ounce of gold. Now, fast forward, a few years later, and at the Bretton Woods agreement, according to that, the US agreed that the central bank around the world could redeem $35 for 1 ounce of gold. So you give us $35, and USA was supposed to give 1 ounce of gold. Now, as countries tried to exchange their dollars for gold, because it became clear that the US did not even have enough gold to back the dollars returning from overseas. Forget the dollars within the countries. It did not even have the dollars returning from overseas. And now, instead again of admitting that the central bank was again bankrupt, the US said it was going to close the gold window. In reality, this was stealing from billions of people from all over the world. By the time to the dollar to gold ratio went from 35 is to 1 to 800 is to 1. The, the government was able to stabilize the dollar by buying up dollars using gold and raising interest rates to 20%. That was at that time. Now, even though the US dollar history is like a dishonest banker issuing more receipts for gold than he has gold, central banks around the world continue to hold US dollars as reserves. The US continues to print more, stealing value from countries from around the world with each new dollar printed. It is fundamentally unfair for the US to get real wealth from billions of poor people around the world in exchange of giving them pieces of paper. Because when China buys the treasury, all China is buying is paper, and in return, they're giving something of real wealth, which is real goods and services. And then they devalue these pieces of papers by printing more and more all the time. Now, countries have slowly started to realize that they are being ripped off, and now they are not going to be holding the dollars as much as they used to. Now, what's it called? This kind of a system is called diversifying reserves. Most of the countries in the world have slowly started to do that. I have been sharing information with you how China and Australia have gone around the dollar and trading with each other's currencies. Iran has been doing that. The Middle East has been wanting to do that for a very long time. So This is something which we can see more and more of. But if and when we break a ice barrier, and the entire world sees this diversifying, when that happens, the value of the dollar will crash, and will crash hard at that time. All right, so let's go on to the trades for today. We actually had UK manufacturing better than expected. Now it contracts only slightly in April. Now, what do I mean by that? It means that the British manufacturing contracted by the narrowest margin in April. When you have something over 50, a value of over 50 means growth, and a value of under 50 means a contraction. The uh, the PMI rose to about 49.8. So there was a little contraction, and it was upwardly revised from 48.6 in March. Now it put the sector within a whisker of the 50 line, which separates the growth from contraction. Basically, the economists had expected a much weaker reading of 48.5. Now, at 2 o'clock Eastern Time, we had the FOMC meeting minutes, and basically, I'm going to read out from the minutes. Information received since the Federal Open Market Committee met in March suggests that the economic activity has been expanding at a moderate pace. Labor market conditions have shown some improvement in recent months on balance, but the unemployment rate remains elevated. Household spending and businesses, fixed investment advance, and the housing sector have strengthened further. But fiscal policy is restraining economic growth. Now, what is fiscal policy? Fiscal policy, there are two policies. One is fiscal policy and the monetary policy. Fiscal policy means taxation, how you tax the public. So, what basically the Federal Reserve is saying is that the taxes are too high. And more on that later when I talk about Apple's case. Now, inflation has been running somewhat below the committee's longer run objectives, apart from temporary variation that largely reflect fluctuations in energy prices. Sorry. Now, I told you I'm going to discuss with you uh, something on the taxation. Now, I'm going to use Apple as an example. Now, Apple sells 17 billion, that's with a B, not million, it's B, billion in bonds in a record deal. Now, what Apple sold 17 billion worth of bonds in the biggest non bank corporate bond deal ever. Bids from the security exceeded 50 billion, that is more than three times the amount offered. The deal clears the way for Apple to return 100 billion to the shareholders by December 2015. Now, there's one thing which people have asked me: why would Apple want to issue bond when it has about more than 130 billion sitting in his bank account? It's not doing anything with that. And the way the stock market works is that everything the company owns eventually belongs to the shareholder, and the company needs to return money to the shareholder. Now, they can do it by two ways: by issuing a dividend or by buying back shares. Now, what Apple wants to do is that it has 130 billion, but they are overseas. They are not in the United States of America. If they are to take money and get the money into the United States, they'd have to pay the federal income tax, which would be 35% of the earnings. So about $45 billion will go off in taxes. So now the shareholders want their money, but they don't want to pay the tax on that. So how do you go about doing this? You go about borrowing money. When you're borrowing money and repurchasing shares or paying a dividend, there is no, it's not like you are consolidating your income from overseas. So this particular tax, the 35%, is not applicable. So, in short, like how I mentioned about earlier, we had the Federal Reserve talking about the fiscal policy um, being a constraint. That's what I think the new um, political engagement is going to be in Washington. We're going to see a lot of people demanding a close of the loopholes and uh, but at the same time lowering the tax rate. So instead of, let's say, 35%, let's say if Apple had to pay 10%, then I'm sure Apple would have agreed to repatriate the money. So that's the kind of dialogue which I expect to see in the with the politicians. But now let's look at what's on for tomorrow. Let's look at tomorrow. Basically, we have the ECB press conference. There is a lot of stuff happening around this time. You know, I normally trade the unemployment claims, but not this time. I think I'm just going to pass it. I'm not going to be, trading tomorrow because I don't see a clear cut trade standing on its own which I could profit from. So enjoy tomorrow, take time to study, learn about the markets, or have fun with your family. Bye for now.